Welcome. In this video, can ZBCN coin increase by 300%? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A notable ascending channel structure can be observed on the chart. This structure shows that the price is moving upward within a certain range, indicating a generally bullish sentiment among market participants. The lower boundary of the channel acts as a support level during pullbacks, while the upper boundary usually serves as resistance, often leading to selling pressure when tested. Between these two boundaries lies the midline zone, which is considered an important dynamic level that can offer insights into the direction of price movement. Looking at the current price action within this ascending channel, it is clear that the price has moved above the midline. This development can be interpreted as a highly positive signal from a technical analysis standpoint. If the price is displaying upward strength within the channel and has successfully established itself above the midline, it indicates that buyers are firmly in control and that momentum may be increasing. This positioning above the midline strengthens the potential for the price to move toward the upper boundary of the channel, raising expectations of continued upward movement. Additionally, ascending channels typically suggest a healthy market structure, where the price rises with periodic corrections. When the price finds support at the lower boundary and moves upward, it usually signals strong buying interest. Similarly, breaking above the midline and holding above it confirms the trend in technical analysis. The midline often acts as a decision zone. When the price breaks above it, it means buyers have taken full control, usually marking the transition to the next stage of the uptrend. At this point, another important factor is not only that the price has crossed the midline, but also that it has managed to hold above this level. In some cases, the price may temporarily move above the midline only to fall back below it. However, in the current chart, the price has firmly settled above the midline, and this level is now beginning to act as support. This is a highly positive sign. As long as the price remains above this support level, upward movement is expected to continue. Breaking above the midline also tends to break psychological resistance for investors. Increased confidence at this level may lead to a rise in trading volume, further supporting price acceleration. When price surpasses such significant technical levels, it often triggers a positive shift in market sentiment. This shift provides hope not only for short-term traders, but also for investors with medium to long-term strategies. That said, in technical analysis, the upper boundary of the channel is considered a key target level. Especially after the price breaks above the midline, the journey toward the upper boundary typically unfolds with consistency. Small pullbacks may occur along the way, but the overall trend remains upward, fostering a positive outlook for investors. Once the price reaches the upper boundary, it is natural for it to pause or experience short-term profit-taking. However, if the uptrend remains strong, such corrections often create new buying opportunities. The fact that the price is currently trading above the midline indicates that a breakout has occurred and that it is to the upside. Such a breakout usually corresponds with an increase in long positions and heightened market expectations for further gains. This breakout is also a strong signal that investor risk appetite is growing, confidence is being restored in the market, and positive news flow is being priced in. Another factor to consider in channel structures is the slope of the price movement. The steeper the channel, the stronger the uptrend. The currently observed channel has a steady slope, suggesting that the price is in a healthy uptrend. This increases the likelihood of the price reaching the upper boundary. In technical analysis, such channels also provide insight into the duration of a trend. As long as the price remains within the channel, the trend is assumed to continue, and the current outlook clearly shows that this structure is intact. Taking all of these technical analysis findings into account, it can be said that the price is currently trading in a highly favorable zone. The break above the midline and the ability to hold above it signify a critical step in the upward trend, with the upper boundary of the channel emerging as the next technical target. During the journey toward the upper boundary, it is likely that price momentum will increase and investor confidence will continue to build. This upward movement is also seen as a sign of a healthy market dynamic and brings the potential for the price to reach the psychologically significant $1 level into focus.
Therefore, the price has now settled above the midline within the current ascending channel structure, establishing a strong foundation for continued upward movement. Technical indicators, volume analysis, and investor behavior all support this move, providing promising signals that the price's upside potential could increase even further in the near future. The upper boundary of the channel should be closely monitored as the next technical target for this uptrend. But we can't base our analysis solely on the channel. Let's take a look at other metrics as well. Stay tuned.
The Elliott wave theory is a highly effective technical analysis tool used to analyze recurring wave patterns in the markets and help investors predict price movements. According to this theory, markets move within a trend structure composed of 5 main waves: 3 impulse waves, waves 1, 3, and 5, and 2 corrective waves, waves 2 and 4. Each of these waves has distinct characteristics, with the third wave often considered the longest and strongest, offering significant opportunities for investors. In the current analyzed structure, when examining the price movement, it appears that the market has completed the first wave and gone through a corrective second wave. In this context, based on the current price action, there are strong indications that the asset has entered the third wave. The beginning of the third wave typically coincides with a period of increased investor interest, accelerating momentum, and rising volume. This implies a high potential for upward movement. In other words, market participants may be at the early stages of the third wave, a point that many professional investors regard as the safest and most profitable phase of a trend. One of the most commonly used methods for identifying third wave target levels is Fibonacci extension levels. These levels help estimate how far the third wave might extend based on the distance between the first and second waves. Among the Fibonacci extension levels, 2 critical zones stand out: 1.618 and 2.272. These are considered highly reliable technical targets, with the 1.618 level often referred to as the golden ratio, a mathematical constant frequently observed in nature, art, and financial markets. In market terms, this level often represents a powerful upward move during the third wave. The 2.272 level, meanwhile, serves as a more extended target, indicating a potential peak if the third wave unfolds with extraordinary strength. In the current price structure, the beginning of the third wave and the presence of potential targets between these 2 key Fibonacci levels present an exciting scenario for investors. If the price reaches the 1.618 level, this move could represent a gain potential of 100% to 200%. A rise to the 2.272 level could extend this potential to around 300%, indicating the possibility of significant profit for investors. Such large upward movements are more likely during strong trend phases, especially when supported by positive market sentiment, favorable news flow, and bullish technical indicators. However, to determine accurate targets within the third wave, investors should consider not only Fibonacci ratios, but also previous resistance levels, volume profiles, moving averages, and chart patterns. No matter how strong a third wave may be, it rarely moves in a straight line. Minor corrections, resistance zones, and price consolidations can occur throughout the wave. Nonetheless, the overall trend remains positive and holds substantial value for long-term investors. The current position of the price at the start of the third wave presents an opportunity to enter the upward movement early. At this stage, combining both fundamental and technical analysis can improve the accuracy of investment decisions. From a fundamental standpoint, factors such as project developments, partnership announcements, network upgrades, and regulatory compliance are important. From a technical perspective, support resistance zones, chart patterns, channel structures, and trend lines should all be taken into account. Another critical consideration during the third wave is the implementation of a stop-loss strategy. While the wave may be upward trending, sudden market fluctuations, news events, or large investor sell-offs could trigger pullbacks. To mitigate such risks, a proper risk management plan should be in place, and positions should be reassessed if the price falls below key support levels. In conclusion, the current price structure provides strong indications that the third wave has begun according to the Elliott wave theory. The minimum target for this wave is set at the 1.618 Fibonacci extension level, with the potential to extend to the 2.272 level in a stronger bullish scenario. This represents an area of high profit potential for investors. However, to fully capitalize on this opportunity, careful analysis, close monitoring of technical indicators and market news, proper risk management, and patience are all critical. While market dynamics are always subject to change, participating in the third wave can open the door to substantial long-term gains for investors when approached strategically.
The MACD indicator is a highly valuable tool frequently used in technical analysis to identify trend reversals and momentum shifts. Within the current market structure, the MACD lines forming a crossover in the lower region and turning upward can be interpreted as a highly positive development from a market dynamics perspective. Such a setup may provide investors with the initial signals of upward momentum in price movements, especially when this crossover occurs in the negative zone below the zero line. It can indicate the potential for a larger trend reversal. Crossovers below the zero line typically occur near trend bottoms and may suggest that a strong upward move could follow an accumulation phase. The MACD indicator consists of two main components, the MACD line and the signal line. The interactions between these two lines can be interpreted as buy or sell signals in the market. In the current scenario, the MACD line crossing above the signal line from below, and this crossover being clearly visible, indicates that the buying side is beginning to gain strength. This type of crossover is significant in showing that downward momentum is weakening and buyers are becoming increasingly active. Such a signal may lead many investors to re-evaluate their positions. Historically, similar crossovers have often been followed by upward rallies, highlighting the effectiveness of this indicator. Movements of the MACD above the zero line offer stronger insights into the direction of the trend. Currently, the lines have crossed below the zero level but are showing an upward trajectory. If this movement continues and the MACD lines rise above the zero line, the upward momentum is likely to strengthen further. A MACD structure above the zero line can serve as strong evidence that prices have entered a bullish trend. In the past, such structures have been seen as the starting points of strong bull runs. Especially when this move above the zero line is accompanied by high volume candles, it can boost investor confidence and lead to increased market participation. Another element to consider at this point is the histogram bars. The histogram visually represents the difference between the MACD line and the signal line, showing whether momentum is increasing or decreasing. The histogram bars beginning to grow and approaching the zero line indicates that the market is gaining momentum and the upward movement is strengthening. This can signal not just a short-term bounce, but a more lasting and medium-term trend reversal. Therefore, the histogram nearing the zero level, along with the lines climbing toward it, is a very valuable signal combination that may indicate a significant bullish setup in the making. When observing typical market behavior following such crossovers, it is often seen that prices begin to rise rapidly and suddenly. In particular, crossovers that occur when the MACD lines are below the zero line can lead to prices testing and even surpassing previously established resistance levels. However, it is important that such technical indicators are not evaluated in isolation. When the positive signals generated by MACD are analyzed alongside other indicators, they can provide investors with a significant advantage in the decision-making process. When examining the current technical structure, it is clearly observed that the MACD lines have entered an upward trend following a crossover in the lower region. If this type of formation continues to strengthen over time and the MACD lines cross above the zero level, a noticeable shift in market sentiment is likely. This shift can present significant opportunities not only for short-term traders, but also for investors with medium and long-term strategies. MACD lines trading above the zero line support the positive market atmosphere and also confirm that rising prices are based on a stronger foundation. Furthermore, the fact that these positive signals from MACD structurally align with current market formations and trend patterns increases reliability from a technical analysis standpoint. For example, a positive MACD crossover occurring alongside a price structure forming higher lows offers a strong technical argument that the trend will continue. In addition, volume data moving in parallel with MACD further reinforces these signals. If the MACD moves above the zero line and the histogram bars continue to grow, this indicates that market participants are becoming more motivated to buy, which supports the potential for prices to reach higher levels. In conclusion, the current upward crossover and movement observed in the MACD indicator can be considered a highly positive development in terms of technical analysis. If this move continues and the lines cross above the zero level, it could signal not just a short-term rise, but also the beginning of a medium to long-term bullish trend. Paying attention to such crossover signals can help investors better time their entries. Particularly when a widely used and trusted indicator like MACD generates positive signals, it can also positively influence investor sentiment and create buying momentum in the market.
This could lay the groundwork for a stronger upward price movement in the days ahead. The MACD lines should rise.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.